The retail apocalypse has been a buzzword for years, but now it seems to have caught up with Amazon. How is Jeff Bezos going to navigate these dark times for his company? Stay with us in this video to find out. Amazon has spent nearly 30 years becoming the ultimate master of online shopping, delivering anything you can think of as fast as possible and at a bargain price. By pretty much any standard, it's one of the biggest corporate success stories ever told. However, Amazon has its weaknesses, and one weakness is grocery shopping. Remember 2017? That was the year Amazon decided to go all in on the grocery business by dropping a jaw-dropping $13.7 billion to buy Whole Foods. For context, that was over 10 times more than they'd spent on any other deal before. Prime Now, which was Amazon's first step into the food delivery game, launched in New York City in December 2014, marking the company's move into groceries. It was a bold start, but it wasn't the end of Amazon's plans for food. By March 2017, 6 months before acquiring Whole Foods, Amazon introduced Amazon Fresh stores in beta. The concept was simple: order groceries online, drive to the store, and have everything loaded into your car. It was a glimpse of Amazon's ambition to blend convenience with groceries. Then came August 2017, and Amazon made its biggest move yet by acquiring Whole Foods for $13.7 billion. The deal didn't just make headlines, it sent Amazon stock soaring and positioned Amazon as a serious seller in the grocery world. With this move, the e-commerce giant bridged the gap between online and brick-and-mortar shopping, changing the grocery industry forever. In 2018, Amazon introduced its ambitious Just Walk Out technology, positioning it as a groundbreaking advancement in retail. The point of this system was to allow customers to shop without stopping at a checkout, offering a fully automated, cashierless experience. But here's the twist: rather than conquering the grocery industry as expected, Amazon has hit some serious roadblocks. The company is now scaling back its brick-and-mortar operations, closing multiple stores as its retail and grocery segments wrestle with lower sales and a tough economic outlook. Even the Just Walk Out technology is being removed from Amazon Fresh grocery stores and being replaced with Dash Carts, smart shopping carts that let shoppers scan items, link to online shopping lists, and complete their purchases. Now, at first, its Fresh supermarkets and cashierless convenience stores experienced a pandemic-era sales surge, but since mid-2021, those numbers have been steadily declining. Revenue is shrinking and the outlook isn't looking much brighter. While the original system aimed to simplify the shopping process, challenges like weighing produce and customer hesitancy made it less appealing, particularly in grocery settings. In 2023, Amazon paused its Fresh store expansion, dealing with technical issues, difficulty attracting grocery shoppers, and heavy competition from established players like Walmart. In a bid to rein in costs ahead of its quarterly earnings report, CEO Andy Jassy is making cuts, but the numbers aren't looking promising for investors. Earlier this year, Amazon stock took a major hit due to persistent struggles in its physical retail business. The fallout was so bad it even shaved billions off Jeff Bezos' net worth. With consumer budgets still squeezed by rising prices, Amazon's once hyped tech-forward stores are being shut down in locations where they failed to wow shoppers. The hundreds of Whole Foods locations and several dozen cashierless Amazon Fresh and Amazon Go stores have fallen short of expectations. It's becoming clearer by the day that Amazon might have made a mistake in going into the grocery industry, which may have been a misstep. In its latest earnings report, CEO Andy Jassy acknowledged that the company has yet to come up with a winning formula for groceries. Amazon plans to close several underperforming locations and is stopping further expansion of its grocery chains until it finds a way to stand out in a crowded market dominated by established competitors. And even though Amazon shifted focus to groceries last year, shutting down its bookstores to zero in on this market, it hasn't been enough to weather the storm of closures fueled by the retail apocalypse. Despite grocery being a robust spending category, Amazon is struggling to find its footing. Amazon's grocery ambitions have been to deal with declining sales and persistent underperformance at Whole Foods, which has led to tough decisions. Even worse, Amazon's grocery pullback is happening amid an increasingly challenging retail environment. While traditional grocers thrive, the e-commerce giant is failing to prove its relevance in this space. The issues came to light after Amazon reported Whole Foods' largest quarterly loss in 7 years, prompting industry analysts to question the grocery chain's viability. Unfortunately, Amazon currently lacks a clear strategy for physical grocery store growth, relying instead on a collection of ideas without a cohesive plan. One major misstep was Amazon's failure to meaningfully integrate or expand Whole Foods following its acquisition in 2017. Industry experts have criticized the company for not leveraging the Whole Foods brand effectively. As one analyst put it, the acquisition didn't set the world on fire or help Amazon gain significant market share. Instead, the company seems to have learned a hard lesson. Relying on technology alone isn't enough to succeed in the competitive grocery sector. Not too long ago, the company's new CEO confidently stated they were doubling down on the grocery sector, but now Amazon appears to be rethinking its strategy, pausing the development of some Amazon Fresh stores and even shutting down locations they believe may struggle to survive in today's economic climate. Grocery industry consultants have also pointed to strategic mistakes in Amazon's handling of Whole Foods. The company underestimated the problems of the grocery market and failed to fully capitalize on Whole Foods' established reputation. This miscalculation has left Amazon struggling to compete with established players and adapt to the demands of grocery shoppers. Yet Whole Foods' struggles are just the tip of the iceberg when it comes to Amazon's bigger issue with its grocery game. Grocery stores are well known for their tiny profit margins. Basically, they don't make a lot of money per item sold, and that's not exactly Amazon's strong suit. The company is used to operating in industries where the profit margins are nice and big, so this grocery business is a bit of a tricky shift. Earlier this year, Michael Pachter from Wedbush Securities pointed out that Amazon's massive investments into a grocery model that isn't fully fleshed out yet might not be paying off like they thought. It's making people wonder, can Amazon really figure out how to survive in the grocery world? The company's usual focus on technology and big profits just doesn't line up with the grocery business, where things like customer loyalty, competitive prices, and locally sourced products are the real stars. As regular grocery chains keep getting stronger and organic options pop up everywhere, Whole Foods might be losing the special edge it once had, especially in such a crowded market. Whole Foods used to be the go-to spot for local and small-scale producers, but that reputation has taken a blow. As the company shifted to a centralized purchasing model, many of the unique, locally sourced products that once made it special have disappeared from the shelves. To make things worse, Whole Foods is still pretty expensive compared to its competitors, which makes it harder to justify the cost when organic food is now available just about everywhere, even at affordable stores like Aldi. Making matters worse, Whole Foods has also earned a reputation for subpar customer service, which undermines its ability to justify premium pricing. Competing against retail giants like Walmart is already a problem, but Whole Foods also struggles to stand out next to brands like Trader Joe's and Target. These competitors have cultivated strong customer loyalty, especially with their popular private label products, which offer affordability and quality. At a time when US consumers are tightening their budgets and sticking to familiar, cost-effective shopping options, Whole Foods appears increasingly out of sync with market demands. Despite Amazon's dominance in other sectors, it seems the company failed to fully understand the fiercely competitive grocery landscape, leaving its grocery chains vulnerable and struggling to carve out a sustainable niche. Now Amazon is making some big moves to cut costs. They've decided to stop building their second headquarters in Northern Virginia. Earlier this year, they already confirmed plans to lay off 18,000 workers, and just recently CEO Andy Jassy dropped the news that another 9,000 job cuts are coming, pushing the total layoffs for 2023 to a jaw-dropping 27,000. And if that's not enough, Jassy hinted that even more jobs could be on the chopping block in the months ahead. Amazon is also scaling back its physical retail footprint. The company plans to close down 1/3 of its Amazon Fresh stores, including all locations in San Francisco by April 1st, as well as several stores in Manhattan and Seattle. Even Whole Foods Market, Amazon's natural and organic grocery chain, isn't immune. Dozens of stores across Alabama, California, Massachusetts, and Illinois are set to close. The combination of missteps in grocery, massive layoffs, and store closures paints a challenging picture for Amazon as it reevaluates its strategies and cuts losses in underperforming areas. As Amazon's grocery ventures continue to stumble, it's becoming clear that the company's expansion into physical retail was a miscalculation. The combination of declining sales, store closures, and layoffs paints a troubling picture for the e-commerce giant. While Amazon may dominate many other sectors, the grocery industry has proven to be a far tougher market to crack. As Amazon rethinks its strategy, it remains to be seen whether it can find a sustainable niche in the competitive world of groceries, or if it will ultimately retreat from the space altogether. That's all for this video. What do you think? Let us know in the comments section and enjoy our other videos.